Hey everyone, what's going on? Welcome to the Reality of Real Estate podcast. I am one of your hosts, Christopher Lynch, and welcome my co-host.
Hey everybody, my name is Brianna Lehman.
We give you a real take on making homeownership attainable.
We will be breaking down real-life scenarios, trends in the current market, and giving you our personal tools to make homeownership not just your dream, but your reality.
Get ready to be inspired, motivated, and ready to take action towards building your own empire.
Because when you invest in real estate, you aren't just purchasing a home, you're investing in your future. Hey guys, welcome back to the Reality of Real Estate podcast with
Chris
and Bree. We are excited to be back this week to talk to you guys about something we, especially Chris, gets questions about all of the time. What is the lowest credit that we can purchase a home with?
Yes.
And how do we build credit? What affects our credit? What is credit? And
Why would you ask that?
That people ask us that. What is credit?
Fair.
And I have questions about my own credit all the time to you. You know that. I'll call and say, does this affect my credit? What does this do? How does this look? So
Hers are always student loans, everyone.
And half of theirs are going to be student loans too. Because for what? How many years did we not have to pay our student loans? And then they just send me a letter that my
3?
Yes.
Was it 3?
Mm-hmm.
Oh, yeah.
A good
3
friend
years.
of ours always says those student loans are between Joe Biden and God. And I feel that way. I do feel that way.
Fair. All right, I'll take it.
Okay. So yeah. How are you today before we start?
Good. How are you?
I'm good. I was served cold hot coffee from my favorite place and then had to go get mediocre hot coffee to make me wake up. So I feel better now. But
Well, I had coffee at home this morning, and I'm just now drinking my Mountain Dew for the day. So I'm good.
that's a lot of
But I did
coffee
also
there.
have 2 waters.
Okay.
I think that's 40 ounces of water.
We'll talk about water consumption later because I'm already through my gallon of the day.
Oh, well, yeah. No, you won't see me drinking a gallon of water a day.
No. Okay. All right.
But
so, yes, talk to us about that. What affects people's credit? What's the lowest
Fair.
credit? And give us a rundown of what credit is for our buyers who.
Okay.
Don't
So credit, realistically, I would say the reality is for credit is that you can't buy a lot of things here in the United States without credit.
Mm-hmm.
And unfortunately, there are a lot of people who, when they graduate high school and if your parents didn't teach you, unfortunately, you don't know any difference.
Mm-hmm.
And so when you don't know what you don't know, you either find someone along the way who can teach you or you make some mistakes along the way. And so credit, the easiest way to establish it, honestly, is going to be with a credit card, a car loan, or unfortunately, in some cases, student loans. But you also have to diversify your credit. And by doing so, you need multiple types of debt. And so multiple types of debt and hopefully healthy debt.
Mm-hmm.
So you're looking at having a good relationship with your credit cards, having a good relationship with any installment debt, which is going to be, that can be secured or unsecured. So if you get a personal loan from your local credit union, that's an unsecured debt. If you get a car loan, that is a secured debt. And so you have to have a healthy relationship with them, making your payments on time, and try not to apply for a lot of things in the year. So that kind of leads into something different there, but which also impacts your credit is that for your inquiries, you do not want to have your credit ran typically more than 3 times a year. And if you can help it, try not to open up more than 1 to 2 trade lines a year. And so your trade lines is basically what helps you diversify your credit. So that's your credit cards, your loans, lines of credit, those sorts of things.
So you don't want a soft or a hard pull?
It doesn't really matter how many soft pulls you get.
Oh, okay. So what would be for people, what is a soft pull versus a hard pull?
Okay.
And what could...
So a soft pull is what honestly a lot of credit card companies will use.
Okay.
When they initially are looking at seeing if you even, it's like if you see something and say, hey, let's see if I qualify or see if you can pre-qualify, 9 times out of 10, that is going to be a soft credit pull.
Okay.
It's not going to show up on your credit report. So if you came to me today and I did a hard pull on your credit for a mortgage, I'm not going to see that you had 17 soft pulls with different credit card companies. But you can also, like, a hard pull, which is basically where you're going to get that inquiry on your credit, and because they'll stay there for 2 years. So, but a soft pull, no one besides the place who pulled it and you know that it was done.
Okay.
So like that is the difference. Anytime that you get your credit pulled, depending on the type of debt that it is, like you are in, your intentions are kind of there for saying like, hey, if I qualify for this, am I going to take advantage of it? So that's what I mean by, like, if you get that hard pull, you're going to 9 times out of 10, you're moving forward.
Right.
Or if you have a soft pull done and then that soft pull turns into a credit card, like if you apply through, I don't know, we'll call it ABC Bank for their credit card, they start off with a soft pull and then they say, hey, Brianna, you qualify for this $20,000 credit card. And if you say, oh, well, yeah, I'm about to just
sign me up.
If you take advantage of it, then that turns into a hard credit pull.
Okay.
And so the idea behind it is that if they can kind of pull you in with the soft pull, show you what your options are, you say yes, turns into a hard pull.
Okay. Good to know.
But it's going to stay on your credit for 2 years. But like also the other side of that is, let's just say here you did say yes to that and they send you the credit card, but you never activate it. You just wasted a pull.
Okay.
So like that doesn't make any sense either.
Right.
So like you just kind of like your intentions with your credit have to be there. And if we're being honest here, treat your credit like you treat any relationship. So it can either be really good or it can be really bad. So it can be healthy and thriving and just, living its best life, or it can be toxic and it's just like, I don't really know what's happening here. But you got to treat it however you would want to be treated in a relationship.
Right.
So what other questions?
So what does it look like? What does a healthy relationship with your credit card look like? Does that look like you use it every time you go to the store, max it out? Like you pay it off every month?
You're making my heart like race.
But these are questions that buyers really have. Like, what is a healthy credit card relationship?
A real healthy credit card relationship is if you have numerous, like multiple credit cards.
Okay.
But let's just say here, you got that $20,000 one from ABC Bank, and it allows you to shop wherever.
Okay.
But then in addition to allowing you to shop wherever, you get rewards. Like, so you get perks, cash back, whatever. Take advantage of it. Okay. So, but be smart about it. When you go get gas, you go get groceries, maybe
That's $20,000 right there.
These days, it might be. But when you do those things, you have to figure out what is your cycle date and what is your statement date.
Okay.
And
two
different things.
Okay.
Your cycle date is when it actually is going to report to the credit bureau. Your statement date is when your statement is cut. So most credit card companies, your cycle date is going to fall somewhere between the 17th and the 21st. So you can call them and you can ask them, but that's how you know when your balance of whatever you currently have is going to technically report on your credit report. So the smart way to play the game is to, whatever your balance is, whatever you used it for, if you can, pay that down as low as possible, or just pay it off in full every single month. So then that way, when your statement goes out, then you also, at that point in time, you're not paying any interest on that money that you've spent. And then you are then in a position to where it's going to show that you have a healthy relationship with this card. I had an old boss tell me one time that credit cards are like a life insurance policy on your credit report. It can tell you someone's true life expectancy, and it tells a creditor how well you value your life.
Wow.
And I never thought of it that way until she told me that. And it kind of just stuck with me to say, all right, well, if you have $100,000 worth of open credit and on a monthly basis, sure, we can see that you use it, but let's just say here you're only using it gas, groceries, like wherever you shop at or whatever, but you're paying it off. But then you have all these other credit cards that are open, but you use them well. And it basically says that, hey, this person is responsible, like they care, they aren't trying to basically live outside their means, those sorts of things.
Right.
But I also look at it from the perspective of life happens. So when life happens, and if depending on what you make, can you afford to do whatever it is that you need to do at that point in time without using a credit card? And sometimes that's what happens.
Right.
And so when that happens, you have to then basically kind of hit the reset button, discipline yourself to get that balance taken care of, or balance is taken care of. And then you're kind of just going ahead and hitting the reset button to where it'll bounce back at some point.
Okay. So if you don't pay it off every month, let's say,
you keep a balance.
Okay. So what percentage, like what does that look like? How does it affect your credit? Let's say if you have high balances on your credit cards each month.
So here's another key way to look at that is, let's just say here you have $10,000 in credit card limits. Okay. Your limits are at $10,000, but you always have a rolling $1,000 balance that is reporting. Okay.
Okay.
You're losing automatically roughly somewhere between, we'll call it 10 to 15 points on your credit score.
Wow.
So anytime that, whether it's 1,000, it's 100, whatever it is, think of it, credit cards giving your score or deducting 100 points away from it.
Okay.
So if you are currently sitting at a 650 credit score, but your credit cards are, still have that $10,000 limit, but you're sitting at 5,000, know that in reality, if you took care of that $5,000, your credit score should be basically a 750 to a 752-ish.
Wow. Okay.
So like,
I didn't realize that it really impacts it that much to have balances left.
It's an unsecured debt. And the reason on why it impacts it that much is because it is like any unsecured debt, which is why a lot of people, if you choose to file bankruptcy, you can walk away from it. Compared to a secured debt, it's not always looked at the same. So it's going to have the weight in there for that reason, because that determines on how you choose to basically have the opportunity to do life next.
So all right, so we talked about like what credit is, credit cards. What is the lowest credit limit? Because
credit score.
That's what I mean. Sorry. Credit score, and how, like, what do you do that impacts your credit score?
Not making payments on time. Or if what like burns my soul is that where I think a lot of people get misled is that like if you switch cell phone carriers and don't kind of handle things, wrap things up with the previous carrier, and then whether it's your phone or like your final bill, car insurance is the same way. Cable bills are the same way. That
really,
yeah, like it will automatically get reported on your credit report as a collection. And 9 times out of 10, like most people try to dispute it, but all you have to do is just call them and say, I moved and I actually never got a copy of my last bill, or I switched carriers, I still have the same phone, and my new carrier said that they were going to pay this off, but then like did the new carrier actually give you a credit to where you would have had enough money because of the credit that they gave you to handle whatever you needed to handle with the previous carrier? So it's like those things that truly make an impact on your credit immediately. Lowest credit score that you actually can have is a 300, or you could call it a 0. So like if you
Okay, so that's if you have an established credit or you
Correct.
just kind of let your credit go.
And it doesn't even come up as a 0. It'll just say that no credit established or no factors to calculate a score. But like the lowest credit score I have ever seen is a 357. And it went 357 to a 417 to a 462. So like those are 3 different scores. And but every credit bureau kind of like how they factor and weigh out different things make a difference.
Okay.
But then if you technically pay things on time, you don't open a lot of credit, and I shouldn't say don't even open a lot of credit, but if you don't, like if you're not a repeat offender with like, hey, I applied for these 3 credit cards today and I got approved for them, so next month I'm going to basically, apply for 4 more. You just don't really want to do that if you can avoid it. But you also, in addition to that, keeping a diverse credit file.
Okay.
And that is going to be like trying to have at least 2 credit cards if or more, whatever your life looks like. But if you can, always try to have some form of an installment debt on there, preferably if it is a secured debt. And
so a car,
recreational vehicle, a home, those things.
Okay. So when it pertains to purchasing a home, what does credit look like when it comes to our buyers? Like, what is the lowest credit right now with the programs that you offer? Because I've seen it fluctuate over the last few years, honestly.
Yes.
I've had lenders say that it could be a 550, and then I've had some say like it has to be a 650 for us to be able to qualify them for this program or give them down payment assistance or just anything that even qualify them in general. So what does that look like for you where you are with your programs?
The lowest score that you can have is going to be basically a 500. Now, that having that 500 score, it comes with a lot of demands. So like just right off the bat, it's okay, like they have to have 10% of their own money down. Then they have to have at least 6 months of reserves, and you can't have any late payments on any secured debt, basically depending on where your debt to income ratios fall. It could be somewhere between like the last 12 to 24 months.
Okay.
So like there's just so many things that kind of get factored into that at that credit score, but also like just from the other side of it, can we pull your credit, take a look at it and say like, okay, hey, maybe we can't do something today, but if you do X, Y, and Z,
Right.
we can do something in 6 months, because by taking care of X, Y, and Z, and sometimes maybe it is like that last car insurance bill. So it's like, $147 and paying it
like
off.
hidden things that they didn't even realize were affecting their credit.
And so like, because they're not going to send you a bill every single month at that point.
No, it's in collections. They don't care at this point.
And so like they will call you a few times. If you don't answer, they just kind of move on. So there's that. But then for like, if you're an FHA buyer or a VA buyer, truthfully, a 580 is where you need to be. If you are a USDA buyer, like for me, ideally as close to a 620 or higher that you can be, like that's where we want you to be. Conventional, it really just depends on the overall score, but truthfully a 620 or higher, but then a factor in with that is going to be your down payment and debt to income ratios. So anyone can buy a house. It's whether they can do it today, 6 months from now,
Right.
a year from now, what have you. But if we come up with a plan of action pertaining to how do we fix and adjust your credit, it's going to take discipline and commitment.
Right.
And so I can say that, like, I mean, I have 3 clients right now who are just like on it, and like the communication is great between myself and them, and like they're just committed because they didn't know any better. And so now they're started to learn things and they've started to ask the right questions, like, and they want to know. And not everyone is going to take the time from like my side to help them put together a plan.
Right.
And
which is huge and we've worked with clients in the past where
yes,
you've put them on that plan and it was, 3 months from now, and then in 3 months they're ready because they did it. Or we've had clients who didn't do exactly what they needed to do, and 3 months turns to 6 months, 6 months turns to a year. And so how does having a higher credit score benefit them?
These days, it really just is going to be a benefit. In my personal opinion, it will be a huge benefit always when it factors into interest rates.
Right.
2, when you're looking at the different type of loan products or program that you want to take advantage of.
Mm-hmm.
So like the higher the credit score, the better. But then but you could also be a perfect credit score, which is an 850. And if you don't have the means or the funds to actually like for down payment and closing costs and that stuff, do you still need down payment assistance? But like with an 850 credit score, it's a lot easier for down payment assistance as long as your debt to income ratios are in line.
Mm-hmm.
Now, if you are a 6, truthfully, like I always tell people, if we can get your score to like 650 or higher, you can qualify for pretty much any program, like down payment assistance program.
Mm-hmm.
And so that'll be a factor. But if you don't need it, and I have a guy I was talking to a couple hours ago, his middle credit score is a 603, but he has the cash that we need.
Mm-hmm.
So like we're hitting the ground running. And so like we don't need to wait. It might have helped him, but also like at that point, if he does everything that we're doing, having a mortgage on his credit, he just got a car loan a couple months ago. So like by diversifying it and keeping the healthy relationship, when it comes time to do a refinance, then he can actually take advantage of lower interest rates and those sorts of things. And if he wants to look at paying himself back for the money that he's investing into it now, he can. But he's ready to go and he's tired of renting. Mm-hmm. So it just, everyone's situation is so different. And but there's also local programs like that don't care about credit, and they only care about your debt to income ratio and your household income and like your family size. So like Maslin offers a great program.
Mm-hmm.
In my opinion, it's like one of the best ones out there.
And a lot of people do not know that it exists. Like a lot of buyers, when they're looking at Maslin, they're like, what? Or even Canton City has a program too that a lot of buyers do not know about. And these programs are out there for them to utilize. But
yes. And so it's just like those two programs, like credit isn't a factor. Mm-hmm. And so, but do you meet the income guidelines? And then what about your family size? So then it's just like those things. But like we always look at and say like, hey, like what makes the most sense for you in this point in time in your life? Because anytime you buy a house, life can happen. And so there's no guarantee that it will be your forever home.
Right.
And so like if financially everything else makes sense, we'll put the plan together and say, is it today, 3 months from now, 6 months, and so on. And that's just kind of how I look at it. And I'm always open to like basically reviewing someone's credit, because I can do a soft credit pull and I can do a full review just by the soft pull, because I'll still see everything.
So what I'm hearing you say is no matter what part of their journey they're on, they should reach out to you and we should get them on a plan.
Yes.
Yeah, I agree. For sure.
I like it. So yeah, I mean, that's what I would say. I just think that it makes the most sense. Like if you don't know, pick up the phone and call someone and ask, or like watch videos, read certain things online. And if you're not sure like what to look for, just like, even if you Googled like top 10, like credit advice, tips or something like that, like start there. But like if you look at that and you're just like, this doesn't make any sense to me, call me, email me, and we can talk.
And by calling, they're going to get a personalized plan for their situation, like what they have going on. Because like you said, they could have this hidden debt that is affecting them poorly and they don't even know about it. I mean, that happened to me actually when I switched from insurances, I switched from Geico to Progressive.
Out here name dropping people.
Well, I didn't know. But I had like $181 like transfer. I don't know what it was for, but
It's probably your last bill.
and I didn't know about it. And I got a letter from a collection agency, and I called and I paid it immediately. But like you said, they weren't really hunting me down to get
No.
it paid. They sent me one letter, and I caught it and got it done. I had no idea that it could affect my credit though. So, well, I know once it goes to collections, it can, but
When
I
you
didn't.
paid it, did they remove it?
Yes, they did.
I just want to make sure you remember.
Yeah, I did. I checked.
Yeah. And so if you, just a little helpful, you know, I don't know, piece of advice, if you pay a collection off, and if depending on the type of debt that it is, always ask for them to try to remove it. And if they will remove it, that is like golden for you. Because, and then when they remove it, ask them for a letter of deletion. And that is like gold, because if it kind of basically holds them to their word that they said that, you know, that they would remove it. And so if I went to go pull your credit 6 months after that happened, and if I say, hey, like you said you took care of this and it's still on here, and you'd be like, oh no, wait, they sent me a letter of deletion and I have it. And
Then you can override it,
Yep,
basically. Okay.
I can send it in to basically have your credit score adjusted and have it actually removed at that time.
Okay.
So yeah,
This has been good.
I like this one a lot.
Yeah, and I think that this one especially is going to resonate with a lot of people, because even I work in this world, and I still call you with questions about credit, my credit,
I
other
thought you were
people's
working
credit.
on the moon. You work in this world. Like, where else are you
The
working?
real estate world. Don't
Oh,
be
okay.
rude. We made it this whole episode without this. But no, seriously, like credit is such, and it can be such a touchy subject for people,
Yeah.
you know, but we all go through this, you know, we all have to worry about our credit
It's a
and
requirement in order to really like,
function in society.
yes. So if
Which
you,
is crazy.
it is, but like in order to, if you don't come from a family who's going to help you pay cash for school, pay cash for every car that you choose to buy, pay cash for a house that you choose to buy,
Right.
like you're going to need to establish credit. And then in addition to establishing it, how do you keep a healthy relationship with it? And then from there, how do you let credit work for you? And that's when you take advantage of like you know, cards that give you cash back and other
Right.
perks and things like that.
Because not just any credit card is a good credit card.
Correct.
Like you can just Google credit cards and apply, and you're going to get a credit card in the mail.
Yeah, and
It's
that's just not how it
no.
works.
This almost seems like this should be a class in high school, doesn't it?
It should.
That we didn't have. I don't know. Do they have do they have finance classes in high school now?
It depends on the school district, but some
In
school
what
districts
they're-
actually have a requirement to basically go through a financial literacy like year.
How lucky.
And
Because we did not have that.
no, mm-mm,
No, yeah.
no, and
You
not
should
at
teach
all.
it.
I actually would love to teach it.
You should.
Yeah,
You
I
should
would.
just start emailing schools. But let me come in and teach. But no, seriously, this
I
was
mean, I
really
used to be
good.
a teacher, so I guess I could, but I also would have to
You
like,
were a teacher?
yeah, that's a whole nother conversation for a whole
Who
nother
are
day.
you? I just learn new things. I talk to you every day, and I'm learning
Well,
new things
I
about
work
you.
here on Earth. Apparently, you work here on you work on the moon.
Mm-hmm.
Something like you work in this world. But yeah, no, I would like that.
All right. Well, this was really informative to even me. So good job.
Awesome. Well, thank you.
Next time, we'll talk a little more in depth about what happens next. So we talked
yeah.
about credit. Let's
Get you to the next step.
Yeah.
All right, I like it.
All right.
Well, thank you guys. I hope that you enjoyed episode 3 with the Reality of Real Estate podcast with Chris and Bree. And
Really, just with Chris today, but that's okay. I asked the question.
I can't stand you. She was actually here, but if you recall, she
I was
doesn't
not
really,
on Earth. Yeah.
Yeah, she doesn't work on Earth. So thank you guys, and we will see you next time.
But in the meantime, if you want to reach us,
Look at you
my
coming through.
email is blaymanrealtor@gmail.com.
And mine is christopher.lynch@ccm.com. And please make sure that you
Yes.
follow our new Instagram account.
Brand new.
Brand spanking
We
new.
got one post. Do we have more?
Calm
than one post?
yourself. Reality of Real Estate podcast. But thank you guys.
Chris is in charge of the podcast or of the Instagram. So that's why we have one post. All right. Well, we will see you guys next time.
Bye.
Have a great day. Toodles.
All right, friends, as we close things out today, remember homeownership is more than just a roof over your head. It's a symbol of your strength, resilience, and determination.
Take action, embrace growth, and never be discouraged about where you are in your journey.
And remember to follow us on Instagram at Reality of Real Estate Podcast.
Our emails are linked in the description below. You can reach us at
Christopher.lynch@ccm.com.
and my email is blaymanrealtor@gmail.com.
All right.
Toodles.